Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, July 9th, 2021. We'll take a brief look at the broad markets, very brief as far as the indexes go. I want to look at the leading companies, the top holdings of the Nasdaq 100, what I refer to as the Fang stocks, FAAMG. And then just updates on a few other trades. I want to update the grains. We'll look at wheat and corn. We'll look at the ETNs on those as well. I usually do futures, but take a look at the ETNs for the longer term picture. And then maybe, time permitting, a couple more ideas. I wanted to hit on some of the sectors I've highlighted recently, like the financials and energy sector. We'll see, time permitting, maybe an update on the AMC. Still grinds around, going pretty much sideways now for a while. All right, starting out here with the Nasdaq 100 futures. This is NQ, 60-minute chart of the Nasdaq 100 futures, and we're still above the primary uptrend line. That's the primary uptrend line on the 60-minute chart here. Comes off the mid-May lows right there. Lots of reactions, including the one we just hit it yesterday, and so that's that. So that is why we're continue to await a sell signal. We had the minor trend line break, and we're actually back testing the minor trend line right there right now. So nothing's going to happen today, barring some crazy reversal into the close, which I don't expect. So this will be continued tomorrow. Again, divergences warn of that an impending correction is likely, not guaranteed, but likely at this point. And so this is what we'll be looking for next week, break of the trend line. Moving on, let's not go over every other index, because when this one breaks, it'll take the market down with it, because the top heavy stocks we're going to look at right now, again, those market leading Fang stocks, they are also top components to the S&P 500. So this is QQQ. This is a daily chart. You have the same trend line I showed you on the 60-minute chart here, and you can see we just hit it yesterday, and that's stick save. Well, actually right on it. When you scroll in, you move a perfect tag of it. When I scroll in nice and tight, that's yesterday's candle. So there it is. It's a nice, well-defined trend line. That's why I put very good odds that if and when we get a solid break below, especially a 60-minute candle would be your nice to see a close there on that 60-minute chart at NQ and QQQ, and all the better if we can get a daily close here on the QQQ daily chart sometime next week or whenever it breaks. And then let's look at the market leading Fang stocks. This is Apple. A couple things stand out to me on Apple. Number one, when you look at this shaded area, there's a big shaded box here, and that's been a multi-month trading range, and we had a high right there put in Apple back on all-time high back in January. So that was towards the beginning of the year, and that's what's been capping Apple for the last couple days here. So again, today it's Friday, it's 2:17 p.m. as I'm talking right now. I don't care what happens to stock, it won't count it as a breakout. I don't take breakouts that occur towards the end of a session, especially on a Friday. So we'll just have to see what happens next week. And like the Nasdaq 100, not by mere coincidence, because this is the top weighting, you have the same trend line there to watch. Although Apple's comfortably above it right now, but again, that'd be a level to watch. And if it breaks the trend line, then we fall back below this 138.36 level that's often acted as a resistance. You can see a lot of reactions there. Now, one other thing I wanted to show you, besides the fact Apple's been grinding around for 1 year now. This is a full year we've been in this trading range. This was last July. We entered the trading range at the end of July, so almost a full year. But you might notice, I don't know if you can see it well in the video, I have some dates here, and I have horizontal lines. That's January 28th, April 30th, July 30th right here. I don't have this one, but this was also marked as with an arrow. These are earnings, and so there would have been one right in the middle there somewhere. Don't hold me on that line, somewhere in there. Q1 earnings right here. So you can see these cycles. This is every 3 months or every quarter when they report. So we're coming up here. If, Apple usually reports at the end of the month, so it's probably going to be, I haven't looked it up, for let's say July 30th, somewhere around there, give or take. So we're going to report. Why is that important? Well, if the stock does break out, an earnings report will either have will most likely have the potential to either foil any breakout above this trading range in these highs, assuming we don't break out before then, Or if we do break out before then, it could be the catalyst for a failure, or it could, we could launch. Let's just look at the charts here real quick and look at the history. Hold on one sec. Okay, had to pause a video there for a while. I had a delivery of sofa we ordered back in January. Finally, these supply chain disruptions are starting to clear. Things are getting back in. And so let me pick back where I left off. I was talking about these earnings. So we look at going back again. These are the lines. This one's going to be coming up at the end of the month. And, typically, especially after a rally heading into earnings, you usually see Apple sell off. That's where a lot of corrections started. Remember, this earnings came right here after a healthy correction. So you would expect probably more upside there. This one, they sold off before earnings, but it was a positive, and it was after an uptrend. But again, a little correction right here, a pretty decent one. That was well into the double digits, and then a rally, and then it peaked out afterwards. That was actually the 4-to-1 split. That was the hype leading up to that top right there, was the 4-to-1 split in Apple, first split in a while. And then, of course, that was a major a buying climax right there. So this one non-event, but again, this one came after a correction. This one came after a rally, nice strong rally, fourth quarter and divergent high, and then big correction. Really, that was it. That was the top put in back in the fourth quarter earnings that were reported back at the end of January right there. Here was first quarter earnings right there, and they sold the stock off. So you can see more often than not, especially after an uptrend, there's a pretty clear history of Apple selling off in earnings. Now you can't you can't bet on it. I mean, you want to take options or a short trade. It's always a gamble when you head into earnings. I'm just showing you patterns and how the stock has traded in the past. So therefore, that's something to look at. If we break out here and we head up into earnings, then odds favor a sell-off in Apple, and then these divergences will likely play out. The other thing you look at, we're just coming off this extreme overbought reading. I think I covered that yesterday, and typically you can see there were some major tops put in on or around these overbought readings that I'm circling. Not each and every time. There was one during an uptrend that was overbought and it continued on, but again, more often than not, you see sell-offs. So that's pretty extensive coverage on Apple. Just rifle through the rest here. Microsoft, looks good. Breakout above the multi-month trading range here. Back there, breakout, a back test, but we are diverging, and we are also Microsoft is extremely overbought. In fact, the only time we've seen it this overbought, let me put a line there for you, and you can tell, we'll color that line, make it yellow, and show you the last time we were that overbought, what happened to the stock, and that was right here. So you can see that overbought reading, and then from there the stock fell approximately 30%. So that's the condition or the state of the Fang stocks. There's Amazon. Amazon recently broke out. It was news induced when Microsoft lost that contract with the government. So far, not much follow through, but it is above the multi-month trading range, but not by a large margin. And it's also coming up on extreme overbought conditions, about 78.50 on the RSI. Last time it was that overbought was right here. Double-digit correction. The time before that was right here, and that correction measured from high to low about 26-27%. Facebook. Nice clear uptrend line like a lot of these Fang stocks. Again, that's a comparable trend line I gave you on NQ. Bearish rising wedge complete with negative divergence, and again, it's all these things that point to a likely correction. It hasn't happened. The market's been resilient, but we do have negative divergence, and we did not have that at the last overbought reading right here. Now we do. We have a lower low. Let me fix that line right there. There's your divergence on the RSI and your divergence on the PPO. So that's Facebook. There's Alphabet, same story, negative divergence building. On this one, it has been for a while, hasn't started playing out yet. It's going to need to take out this minor trend line in purple and then this primary trend line to trigger a longer term sell signal. There's Tesla. I think you guys know my thoughts on that. I've covered that quite a bit. And Nvidia. Nvidia also has a pretty steep uptrend line right now, which it actually just broke down below yesterday. So there was a sell signal on Nvidia. And NVIDIA is about the 7th largest holding, I believe, in the Nasdaq 100, somewhere around there. Extreme overbought reading. It was extremely overbought there, and there was certainly a correction that was double digits, and more so it corrected, other than the initial drop in price, it corrected in time for almost a year there, grinding around sideways, and recently broke out above there. So overall, you have to give props to these stocks, those that are broken out above those ranges, and that's bullish unless they fail. And so if we get a correction, a natural target would be a retest to the top of the range for those that haven't already back tested. So that's the state of the fangs, we'll call it. And of course, that's the state of the market, because what those stocks do, these market leaders, they have such a large impact on the market that they will determine where the overall market goes. Okay, let's loop over to an update on commodities. DJP is our broad, one of the broad commodity ETNs right here. And as mentioned recently, it hit the bottom of the channel, which is the primary uptrend line, just like it hit it there, just like here. Here. So lots of reactions on that line, still above trend. However, we still have some pretty strong divergences in place. Whether they play out or not, hard to say, but they're certainly worth noting, and most importantly, as long as you remain above trend, just like NQ. NQ hit that trend line yesterday, and it bounced, and as I always say, support is support until it's broken. So we'll watch that. Sometimes in a bull market, you can burn through divergences. Other times they play out, and if they do play out, you're going to look for a cross of the PPO down below that zero line. You're going to look for a break of the trend line there, and we could have a more substantial correction in commodities. But until then, they're in a bull market, so I'm going to highlight a few. Some of the ones I've covered recently are wheat. We'll look at the ETN this time before, and then we'll get to the futures. Here's our uptrend line in wheat, WEAT. You leave the H out for the ETN. That's a symbol, WEAT. And you can see it. This is it, marching up in an uptrend, series of higher highs and higher lows. And this is a pullback to the trend line plus the 610 support. 610's a good support level as well. So I still think a case can be made for longer-term traders or investors to step back in. Back here in a few weeks back, I started warning about a likely correction in a lot of these commodities. They were getting really ahead of themselves, very overbought, negative divergences. And I still view this as healthy bull market action. Whether there's more to come or not, hard to say. I can't make a screaming case to buy other than we're at support, but that's enough usually in a bull market. You buy at support with a stop somewhat below and let it run, especially if you're a trend trader or a long-term investor. This is how you want to strategically or tactically manage your positions. You want to be going long on pullbacks to support and either selling, taking some profits, or at the very least not adding when you're overbought, especially with divergences in place like this, and you end up with corrections like this one. You ended up with this correction. So that's wheat. Corn. Wheat and corn tend to move very closely together, and you have a similar comparable uptrend line on corn off the August 2020 lows right there, and you have support around 1917. This is a very good support level. Can't promise anything in trading, but I can promise you, I can say this, I think it's an objective time to be long corn at that pullback to support with a stop somewhat below, because if it breaks that, I don't have support until, let me give you that level, if we do break that, where we are likely to head, and that's down to about 1750 or so. I have it at 1744. That's some pretty decent support. These reactions here and a major reaction high back there. So that would be your bullish case. We bounce and reverse off this support and continue the bull trend. Bearish would be to break that trend line. And then if so, I'll be looking for a pullback to that 1750-ish area as a possible re-entry if this one doesn't work out. Futures, corn futures are the symbol ZC, and what you have, there's a wonky little candlestick. You have positive divergence forming right now. It's not confirmed. Here's the PPO. It's curling down, so we need to see it turn back up and put in a higher low. RSI is also forming some potential divergence, and we have some support here about 522. You can see some reactions all along that area above and below the level there. Quite a few reactions there. One little spike down through there, but enough reactions. So there's the case could be made. Again, it's not a screaming buy, but this, based on what I showed you on the daily chart of the ETN, makes for, I believe, an objective entry. You know, we had one here, we ran up, hit that 619 resistance. And that would also be the next target. So kind of bigger picture right now, at least in recent months, is this trading range in corn. And you know, the MO could be to buy the bottom and, you know, ride it up to the top, or a longer term investor might want to hold out and wait for a breakout of the upside. Again, downside break is going to be pretty bearish, especially if it's anything more than just a brief whipsaw, because we'll have taken out this support here on the futures at 522, as well as the support levels I showed you on the daily chart of CORN, the ETN. And next up would be wheat. Wheat recently took out the trend line. It was ripping, it was impulsive, everything I wanted to see. Hit the first target, consolidated, and got about halfway to T2 and just they petered out. That rally petered out. However, we do have also some potential divergence. You know, shouldn't be coincidence. It usually moves in line with corn. So there's some potential positive divergence right there. I don't have a strong trend line or horizontal level, but again, I showed you the chart of wheat, the ETN, and made the case you could step in and buy there. So targets would be, we already hit T1, so if we can reverse and get back up there again, I still favor a move up here to T2, about 717 and change. Okay, and a quick update on a few of the sectors I've been watching recently, one of those being the financial sector. This is XLF. There was a divergent high right there. There was our sell signal breakdown, hit my first target, and yesterday hit it again. So we'll zoom in nice and tight. T1 was hit back here. We bounced, as is usually the case, the initial tag from above. We bounced again, and so we still need to see, and that will greatly increase the odds of a correction in the broad market if we take out that level, and that's about 35, 33 or so on XLF. So right now, you know, still on a sell signal because we broke trend, and those divergences are large enough that I believe that this drop so far, as much as it was what is that, from high to low, it was about 9% or so. I think there's more to come based on, again, everything here in the charts with the divergences and everything else. But keep in mind, we got oversold. You know, we dropped down all the way to the oversold level in the RSI, and therefore that usually takes a little time to work off those oversold conditions. And again, whether we get it or not, that's the next sell signal break of 35, 33 or so. T1 should take us down to my next target at T2 there. And then KRE is your regional bank sector ETF. That did dip below support recently, 63.75. It's trying to recover today. The day is not over yet. We'll see how this candle closes, but right now it's just above that 63.75 support. Okay, this happens sometimes. I just noticed that the when I paused the video on one of the charts, it did not, when I re-clicked the pause button to start the video back, it didn't continue. So I think, I'm not sure where we left off. There's no way for me to tell until the video is finished, so I'm going to just loop back and do a quick recap of where I think I left off. That would be before I started on the financial sector, XLF. We broke down, recently put in this divergent high, had a sell signal here, went on to hit my first target, bounced there off T1, hit it again yesterday or close enough, and that still remains support. So we're going to need to see that level go to get a decent correction in the stock market. So bottom line is, as I started the video, we're still above that trend line on the NQ Nasdaq 100. Need to see that break. We need to see the financials break my first target level about 35, 33, and if so, that's going to open the door for a move down to T2 and most likely take the broad market with it. But unless we get it, there's no sell signal there. KRE is a regional bank sector ETF. And that did break the 63.75 first target / support recently, but just snapped back up above it today. We'll have to see how the day closes. Maybe we'll probably park on it or near it. Right now we're a little bit above there. But again, the XLF are the big banks, the big financial companies, insurance companies, etc. They're going to have a much larger impact on the indexes than KRE. This is just, you get more bang for your buck. If financials are down, this one usually falls more, and when they're up, just like today, they usually rise more. It's just a higher beta version of trading XLF, if you will. And then Xle Energy Sector ETF. That one broke the primary trend line recently, back tested, hit this $51 support, and that's what it needs to break. So that's pretty good support. You can see a lot of reactions back here recently on that line, and we hit it yesterday, so that level needs to go. Let me remove this other line here. That one's in the way. 51, it needs to go. I'm going to round that number down to an exact level, and once that goes, it'll probably will most likely open the door for a move down to this next support here, about $47. And based on the divergences in place and the recent breakdown, I think it's coming. And the charts of crude futures, we're going to need to see those roll over, of course. We have been diverging. We put in a divergent high here, broke the minor trend line on CL crude futures. This is a 60-minute chart. Kick back, hit the first target, went down, effectively hit the second target, and reversed a hair shy. And so far we're still below that previous reaction low. And so I'm looking for a move down that will most likely take out T2, which is at about 70.50, and have the line right at 70.48. And a break of that would take us down to T3, which is 66.61. It's not going to happen this week, most certainly. If it's going to happen, it'll probably be next week. I would say that this is a counter trend bounce that is most likely run its course here, but we'll just have to see. So I can't put a hard sell signal on it, but based on all the everything in the charts, I think this is probably the end of the run for the bounce, and we'll probably head down next week. And here's LB Lumber Futures. Been highlighting this one recently, so I wanted to update it today. Gap down today, but it's recovered a good bit, about at least half the losses so far. And remember, we hit T1 to the button the other day, had a reaction. So far I'm still viewing this as a reaction. We're still above that previous low. If we happen to make a marginal new low, it will only extend the positive or bullish divergence in place. And we do have a pending or potential bullish cross on the PPO. See right here, we started to turn up, but we didn't cross. If you can make that out right here, but now it looks like a crossover is in place. So again, this will be to be continued tomorrow. It's too late in the day now, 45 minutes to the close. So we'll just have to see what happens when trading resumes next week. But I favor another move up. And you know, I'm going to circle these. You know, if you look closely, we had almost a crossover there, but it didn't materialize. But then we did get a crossover right here. So bullish crossover. The last one was right here. And then we back tested there, so that was that. You got that bounce, and you can go back. Look for these, I call them low-level bullish crossovers, those that are down towards the bottom here on the PPO. And especially during an uptrend, they're going to be powerful. During a downtrend, they're good for at least a bounce trade, most often. No guarantees. Sometimes you get rejected, but I just wanted to point that out. So I still like this one up to at least T2 and quite likely T3. And I think it's going to depend on how much longer the broad market holds up. And last but not least is AMC. This one just, it's amazing how long, you know, with that run up that it had in this consolidation, and then you broke the triangle. I'm surprised it hasn't started moving impulsively lower yet. Now, it's been working its way down. We've had nothing but red sticks except yesterday. 1, 2, 3, 4, and now 5 red sticks since the breakdown. So, and we're still below that 51.22 support and well below the triangle. And being that we've kicked back up towards or close enough to 51, I think it's still an objective short here. And the next stop is still 36, then the uptrend line, and then any or all of these levels. And I think we'll come back here to at least that 1455 level in the coming weeks to months. But again, it's been consolidating for a while. Obviously an aggressive trade. Stay away from that one if it's not your cup of tea, but that's where I think we're going ultimately, is a lot lower. And that's it. We're going to wrap it up here. 45 minutes to go, and we'll pick this up next week. This has been Randy Finney with Right Side of the Chart. Have a great weekend.